All right, let's take a look at FTSE for next week. So last week was a bear doji bar. You see, we broke out of a pretty tight looking trading range in here. We didn't quite get a measured move of that whole range. That was a little bit higher, 8,800, 8,900, 9,000. But we definitely broke out of this range. Bull bar closed above the high, broke further above that bar, but it was a bear bar. And that was interesting at the time because I said, even though that's not a good reversal signal to sell, it's a bit disappointing for these traders. Why wasn't it a strong bull bar like here? Why wasn't it a strong bull bar like here? Breakout, follow through, breakout, follow through. So when you have breakout, bad follow through, breakout, bad follow through, more bad follow through, this is starting to look like a leg in a trading range. And how does a leg in a trading range behave? Well, it usually has at least two parts and it behaves like a channel. You get a good looking bull bar, traders start taking profits or fading that bar to get it to come back down. And so last week, I said that this bar was a bit of an issue. We went above the high of that bar, but we closed inside. We went above the high of that bar the week before, we closed inside. We went above the high of that bar, we closed inside. We keep repeating this pattern. And that means bulls are not going to buy above strongly. They're going to look for pullbacks. So who's going to sell above? Bears are going to sell above. So you have a bad looking bull bar. What do? Traders bought above the high of that bar. We went above it. When they see this bar, what are they going to do? They're going to get out of that price. I'm a bear. I sell there, put a stop at the high, and there's my 2-to-1 target. Isn't that pretty cool? So that's how a bear scalper gets a 2R profit on that reversal. Other bears are waiting for a signal bar. This is a bad looking signal bar for a short. Even though it's up, pullback, up, another pullback, this is really not what you want to see to start a strong bear swing. But it's also not a good buy signal. One of the hallmarks of a trading range is that you don't need a good signal bar. You need a good location. This is not a good signal bar for a short, but it sells off. When we come back up into this range, bull bar with a tail, big sell off. Bull bar, big sell off. It's not about how good the signal bar is, it's about the location. And so when we come back up here, this is actually a reasonable location for bears to start selling. Not because it's very bearish, but because they know they could sell and sell higher above these highs, betting that that's where bulls are going to give up on their long. So I think we're going to go sideways to down here. I think there's a really good chance we're going to go below the low of last week. I'm not expecting a lot of sellers. They might scalp it. To me, this is still a bull channel, and that means the 50% pullback area, which happens to be the top of this range, is a target. Can that go all the way down and then form a tail? Yeah, I think that's pretty likely. Can you buy this bar? No, I just don't think there's any reason to be long up here. So, bulls might try one more time. If this is 1, 2 legs and then a third one, that can be okay. You see this is a breakout and a bull flag, breakout, pullback, 2, maybe one more leg. But for me, it's just not bullish enough. It's really far from the moving average, 280 points. Last time we got that far from the moving average, very long time ago. So I think we're going to drift sideways to down, similar to DAX, although DAX is much more bullish than this. I think we're going to drift sideways to down, probably in a similar shape, something like that, maybe wider, back down to the moving average. So still always in long. There's no signal to get short, so the only sells are for getting out of long positions. No real good stop entry trades. Limit order sell. Yeah, there's probably a sell above that bear bar and higher. Looking for a pullback on the weekly chart. Okay, let's take a look at FTSE on the daily chart. So pullback channel. New spike, new pullback, new spike, pullback to that inside bar, up, and then we just broke it. So the bears would really like this last leg to flip. That's going to put us down all the way back into this tight trading range here. We can see a lot of bars. We're happy at 8,500. So that's a target for bears. Is this going to go straight down? I think that's low probability at the moment. This is also setting up a moving average gap bar long scalp. So the bears would like it to do that, but I think they're going to get disappointed. What typically happens is they get close to their target before they give up. What this does mean, though, is that there's been a really strong trend line break. So if there's been a two-legged move which breaks a trend line, that often sets up a test of this range. So we broke the bull swing point. So swing bulls are out of their long positions, and that means this next setup might be for bulls to get back to break even. There are still a few high ones up there. So traders buying above bull bars and they weren't able to get back. So that tells me that we're going to go higher on FTSE before we go lower, but that's not set in stone. We've still got gaps down here, and this can go for a long time before getting out of that high one. Earlier, when we broke out here, there were high ones, and it was a long time before those traders were able to get back. You can argue that they got out earlier, but bulls that were scaling into long positions had a hard time getting back to their scaling midpoint, right? You're buying there, you're scaling in, you're getting out at break even. So if a bull buys there, where's a bull bar for them to buy to get out break even? Well, that's what they need. They need a bull bar here to come back up into this range, test trading range, and that's where the bears are going to kick off. I think we're in a trading range on this time frame. We've had a really strong two-legged pullback. If this is a wedge and we triggered the wedge here, breakout pullback, so you had a second chance to get into that trade, then your target's 85.93. If a trader was to sell the close on the pullback, they want to get to 85, which is going to close that gap down here on the daily chart. So nothing for bulls to do here. They're hoping for a really strong signal bar, scaling bulls to buy above, scalpers to buy. But this is good selling. Consecutive bear bars, pause. 3 consecutive bear bars, pause. So I think this is going to get a second leg itself, which might have a couple of pieces. And I think we're going to go sideways to down on the moving average. What do bulls need to do? Bulls need to make sure we don't trigger Friday's bar, and instead we immediately go above this bar and then do the opposite. Flip it back into the middle of the range. See how that works? So they can flip that last bar, get back to their break even, and then now we're back into a trading range where everyone get back to trading normally. So I think that's on for next week. I don't think it's always in short, even though I think this was really bearish. For me, I think the bears need to get down here to do some real damage. And that's FTSE for next week.